Gary, I just asked you to unmute, and I want to welcome you to our community.
Thanks for having me. It's quite the honor.
It's great to have you, Gary. I mean, like I was saying earlier, I know you've been on Fox a lot. I think, I'm kind of an old guy. Used to be on CNBC as well. You're a veteran. You've been around for a long time. Do you want to share your screen? Are you going to be showing anything during our conversation today? It's a little green box that says share screen.
Is it there?
There it is. Okay,
Excellent.
yeah, semiconductors. So Gary, before we get to the markets, although you're a veteran that's been around for a while, everyone's younger than me. Can you tell us, a little bit about the beginning of your journey into the business, how it happened for you?
Well, I started it. I started in. Can you hear me?
Yeah.
Okay. I started in the business with penny stocks, selling blind pools, and little did I know, many years later, that it would be the biggest business on Wall Street with these blind pool SPACs. We'll talk about that in a few minutes.
Okay.
In about 1990, I met William O'Neill and David Ryan at a seminar in Boca Raton, Florida.
IBD.
You got it. And I was converted immediately. Then I started reading up about Stan Weinstein. And added some of his stuff. And then through arduous testing and trading and investing and failures and successes and continued failures and successes, we've come up with what we would call a pretty good thesis to how markets work, support and resistance areas. And I'm amazed that, this market, Smith, that I'm showing you the charts, I could go back to the first day the market ever traded when there were no computers, and fear and greed back then traces out the same patterns as fear and greed right now, even though we trade billions of shares, we got algorithms and coins and you name it. It's just absolutely amazing to watch and see. And when I go back to 1905, the fear and greed patterns are pretty much the same in bull and bear markets.
Yeah, Jesse Livermore said that the name of the stocks may change, but human emotion doesn't. And that's why the markets are always the same. So,
yeah, and I
great
must tell
point.
you, with this Bitcoin thing, I'll show you one chart in a little bit, but the GBTC, which is the touched the 50-day moving average within 20 cents recently, and boom, right off of it. And I'll get into it. The 50-day average is really the mainstay of everything I do based on its success throughout.
Let me ask you this, Gary. After the COVID crash, I was looking for a retracement, but I didn't imagine what ended up happening. I couldn't imagine it back then. I thought maybe 61.8 back from the crash or something like that. So you talk about human emotions, fear and greed. To me, it sure seems like we're in, the greed cycle. And isn't the greed cycle getting a little bit longer in the tooth, a little bit long in the tooth here?
Well, 6 months ago, based on the actions of Jay Powell and the European Central Bank, I stated emphatically, I thought there was a very good chance of now getting a climactic melt-up in the market. I put it in writing on TV, radio, everywhere I go. And I also stated, if that was correct, expect some massive froth and speculation in what I don't know, but we'll see it, akin to 1999. And this was based on the fact that, I don't know if your audience knows it, between just the European Central Bank and here, they're printing right now, this second, $250 billion a month. Bernanke's biggest month was $85 billion, and the market soared on that. Lo and behold, many years later, late in the move, and that's where you get this type of activity. And my greatest worry is it's going to be right. And if I'm right on this, we're going to get a climactic move in the indices now, and that'll be the end. And then look out as the biggest one-sided trade of all time gets unwound. And I must tell you, we just saw like the quickest one-sided trade ever in GameStop and those short squeezes. And look how much they dropped. Imagine the biggest one-sided trade that's been building up for years now based on all this money printing and what that can be. But that would be about 5 hours of my yapping to explain all that. But yeah, you're seeing it in droves and companies with no sales. These SPACs that I believe a lot of, not all, are just absolute money grabs. It reminds me of '99 when mutual funds changed their name from technology fund to internet fund, and companies added .com to their name just to move their stock. So all these SPACs are merging with one note: electric vehicles and batteries. And I asked myself, how are 300 to 400 startups going to be able to make electric vehicles and batteries? They're not. It's a money grab. And I've said on my radio show that, and I listen, I believe this, we're going to have 80 to 100% drops in a lot of these SPACs when the market turns. And I mean 100%. There's nothing there on a lot of these things. Now, the good news is there are some, I'm watching some names that merge with real companies, thank God. But the lion's share of it just scares the living willies out of me. And all one has to do is do the due diligence on these companies. And it's almost a comedy act if it's not going to be so sorrowful when all's said and done.
Let me get back to just a couple of the legacy markets. Junk bonds.
Yeah.
Which you know what they are, Gary. I mean, you're a holistic guy. You look at everything. Are making record low yields right now.
Yeah.
And while that's happening, if you look at things like TLT, I'm sure you follow it. Yes. TLT is almost back to the levels where, you mentioned where the Fed came in big time after the COVID crash. What do you make out of that anomaly? Just because are people gravitating to junk just because of the chase for yield? Because it certainly isn't the chase for quality. For
Absolutely.
that spread to be happening the way it is.
Economics 101 is simple. It says the more debt you have, the more you need to pay out the lenders to accommodate for all that debt. The worse debt you have, the even more you have to pay out. Instead, the opposites happen. And so these junk bonds, the most debt ever with yields the lowest ever. And this is because of what the central bank's done. And this is part of what I worry about in the end. The great unwind of the market, excuse the phrase, shooting back the middle finger at all these moves that central banks are doing. And just so you know, I follow them very closely. I write about them all the time. I would have never, ever thought that we'd get to 20 to 25 trillion of printed money. I would have never thought we'd have negative rates going even more negative. And I would have never thought just the US and Europe, 250 billion a month, they're going to print 3 trillion this year and telling us they're going to do it for infinitum. I would have been surprised if the market didn't do what we did here. But there's going to be heck to pay. Austria came out with a 100-year bond yielding 0.8. This is all part of what I consider to be the gargantuan long-term problem of a select few people around the globe creating unimaginable amounts of money to force markets up, and guess what? Now we're in the greed cycle. And I have to tell you, one of the culprits, Bullard, one of the Fed heads, is out this morning saying, "I don't see any bubbles." It's amazing.
Yeah.
It is amazing that somebody would say that after this GameStop just happened, which, by the way, is an outcome of all this. You don't see that in normal markets. So again, I worry about late stage. But look, right now we're in a climactic run. I've been saying I wouldn't be surprised to see the NASDAQ 17 to 20,000 this year, believe it or not. And I don't talk like that.
Yeah. Okay. So, it's not hyperbolic. So with that statement, you feel there's both price and time left in this market. I know a lot of super bulls, they're talking like 4,600, which, doesn't seem that far away when we're knocking at the door at 4,000 S&Ps. thinking that this bull could last another year or two. Do you think that we bought enough time for a couple of years to muddle through this?
I don't know about time.
Yeah. Okay.
To me, we're seeing a lot of climactic moves individually and sector wise right now. And just so you know, in '99, the climactic move did not include the Dow or the S&P. You can see that they were crumbling way before the NASDAQ topped out in March of 2000. So I'm not sure. All I can tell you, I'm a big believer in the interpretation of markets today. We're in a bull market. The semiconductors I follow judiciously because they have led up and down for decades. I think 95% of the time they have been in the lead. I put up the SOX first because you can see here how strong it is. And we can talk the fundamentals and shortages, but I care about price first and foremost.
I noticed you put up the relative strength, and that's Bill. I first learned about, buy the relative strength leaders, and you could do it even in currencies on anything.
Oh, yeah.
Yeah. So you identify what the relative strength is, and you buy those on weakness, and you also identify the relative weakness, right, Gary? So that you could short them on strength.
Absolutely. Look, there's two lines. It's easiest to isolate strength when the market's weak, and it's easiest to isolate weakness when the market's strong. So right now, it is very easy to isolate where weakness is. I have to tell you, though, there's not a lot of weakness. I think we're in record territory, just by my measurements, about how many stocks in the market are trading in what we call uptrends above the 50-day moving average. I don't think I've ever seen it like this in decades on how many things, which is a great thing because there's profits to make, but it's a negative thing because when it turns, there's a lot of things that'll turn. But right now, I'm seeing nothing in the way of trouble this second. The worst thing I can say is the sentiment remains off the charts too bullish. The speculation and froth has, gone into the stratosphere at this point. Those are the negatives. The positive is a price. Price is indicating higher, notwithstanding normal pullbacks, which, by the way, we just had one a couple of weeks ago, and the financials held the 50-day almost to the penny. The oil held the 50-day almost to the penny. The Bitcoin held the 50-day almost to the penny.
Okay, so you have a great line in the sand then. So if this recent move held the 50, say, for example, like you're an RIA, right, Gary?
Yes.
Okay, so say hypothetically, I'm a new client. I could say, Gary, I have 100K cash to invest. What would you do now? Would you tell me to just stay in cash and wait for these pullbacks to deploy? What would you be telling a prospective client with where the market's at today?
Well, I always get scared crapless when we go straight up for a few days, but that's just the near term. All I can tell you is I'll just put up some things. Here's, let's see if this is working. CrowdStrike is breaking out a range right here. I can show you Peloton held the 50-day perfectly on Friday and looks like it's going to set up. I have to mention Tesla again. Look what it did on Friday. It undercut a little bit and held. So let's hope it puts in a flag. I think if Tesla puts in a flag, it's going to go into the thousands. So as long as I'm finding names, I'm good to go. I can tell you on our service, we just put out Rio right off the 50-day, and I hear it's up $5 today because we think commodities are in play. The same goes for BHP here, right off the 50-day. We did that about a week ago. So as long as there's things that are showing up on the screen, we're going to go with it. So it's not a matter of the market per se, even though it's overbought. There are new things showing up in here that we can play. I noticed like an ATI steel, a break above 1930 here. Nice flat potential breakout to go this way. And again, the commodities are acting pretty well. Why? The dollar's sinking like a stone for the last year, and everything coming out of the Fed indicates probably a continued weaker dollar notwithstanding, and that helps commodities.
It helps everything, doesn't it? I mean, in 2008, the first 30% rally from March of 2009 was mainly nominal gains. The dollar dropped 30%. The market rallied 30%. So, a weaker dollar is a tailwind is what you're saying for everything.
Yeah, and here's like the OIH. I'm showing the ETF, so I held the 50 here. Now looks set up to move out. The big oil, the XLE, is going to move out to the upside here. So there's your oils also. Again, I'm not finding much. When I do my scans, I do it without bias. Because I'm looking at markets throughout the day, I can tell. I already know what's going on after the close. But when I scan, it's no bias. I don't even look at the name. I already know what the stock is. I can't find anything that I would really love to short. And that tells me a lot about the market. And there's weakness out there, but weakness gets bought also. And the market.
What is the weakness? Is it still value?
Say that again?
What is the weakness? Is it still value that's a weakness? Or are you a believer that value has turned against growth and will start to keep up with its performance?
Well, I can tell you, beginning of November, when they announced the first vaccine, it turned, and everything that was dead in value woke up. So you're getting much better play. I can tell you here. Here's the airlines, JETS. I'm not a Jets fan, by the way. I'm a Giants fan. But that's going to break out to the upside too here. So there's just another area. So I'm continuing to see all this stuff, and some names already moved above range in the airline. So again, it is a plentiful market right here, notwithstanding pullbacks. I'm just frothing at the mouth to find things I want to short. And I can tell you, like, here's one that stands out, AYX. It's in that software that's dead money, gap down on earnings here. But I'm not going to short anything right now because it probably goes up 20 points in the next 2 weeks because that's the market you're in. But when it turns, we're going to have a field day. Why? Because one of the aspects that's going on, margin has just skyrocketed. I don't have a chart on margin here, but that's what it did here in the last 3-4 months. So that's your.
So people are levered up.
Oh my goodness, that's your $100,000 guy levered up to 200,000. Right. And by the way, a lot of that happened in GameStop recently. I'm now hearing stories of people that bought near the highs on margin, and that's why I think Robinhood had to shut that thing down. I heard some people that put $100,000 and now have $3,000. So buyer beware, as they say.
Are you a believer that these chat rooms like Reddit are really a force in the market? Because I bet you were trained like me to think that retail is always late to the party, and they liquidate when things look the worst. The market always looks the worst at the bottom, the best at the top. And now in this new era, these social networks seem to be able to flex their muscles. Are you a believer in that, or you think that's just a cover story for hedge funds doing whatever they want to do and then pinning it on a chat room?
I think that's late inning action. Simple as that.
Okay.
I don't.
What inning are we in, Gary? A seventh inning stretch here?
I think we may be in the ninth.
Okay, the ninth.
And I say that because just
go ahead.
You don't get this. That's Tilray.
Yeah.
That type of move right there.
Yeah.
That just reminds. That's FUTU, and this one has fundamentals. These type of moves, and I'm not saying they're not going higher. And then one of the big things that's going on right now, just so you know, this is MarketSmith. It used to be the daily graphs. And what's in there, they have this thing called the printed product index. It's about 1,700, 1,800 stocks. And what usually shows up are relative strength, great, the great companies, all I can tell you in the last month, 50-cent stocks are showing up in droves that are going to $3. $2 stocks going to $6. And as I look at all of them, 90% of them don't have sales. And what that reminds me of is late inning froth and speculation. So I think there's just a lot of that going on here. Maybe we're in the 8th and there's more to go. I just think, I said it 6 months ago that I thought we were going to get it. I think we're in the midst of it. And I've been going back to 99 and studying it like a madman. I have to tell you, a lot of these moves have blown away 1999. And it's just so surprising because you never think you're going to get that again. But with the SPACs and people buying at any price, even with companies not even in there, with the penny stock move, with the leverage.
Everything.
I don't know if you know this, there's been 500 secondary offerings by companies in the last 4 months. Wow. IPOs that are coming out at just ridiculous valuations. And they're able to because the market itself and the greed have made it the norm. I just think this is all adding up, and I'm playing it and I'm buying things and I'm invested. But when we get that climactic move, I'll be ready, and because I think it's going to be swift to the downside.
You don't do time, but do you do price? You have any price levels in mind for, say, the S&P, where it might, are you looking like you brought up NASDAQ? 20,000, 18 to 20,000. What's that? 5,000 S&P?
Yeah, honestly, I don't have a price or time just yet. But what I do is, I'm constantly going back. This is the NASDAQ back in, back in 2000, and I keep paying attention to that. Here's the SOX back in 2000. I pay attention to that, and you can just see how you got this and then you got this.
Right.
We're seeing a lot of that, right? We're seeing a ton of that in individual names. If we get that in the NASDAQ, time's up.
Okay. The difference between this time zone that you're showing is that it was mainly just equities and NASDAQ. Now it's commodities. Now it's crypto. Now it's everything bubble. It's different than the big difference, isn't it?
And that's worrisome.
Okay, so Gary, Gary, I've done 1,000 of these. Okay, these interviews, and I can always tell when I talk to somebody if they have a grasp on what's going on. And I'm so glad I reached out to you. For people that are listening live or see the video later, what's the best way they could continue to follow your work? I know you have a radio show.
Yeah.
You want to give people contact information or show your website would be fine at this time?
The easiest is GaryK.com, and you can just email me through there. We have a big email service, and we do 2 one-hour webcasts each week showing you exactly what we're showing, and we cover everything. And I never thought I'd have to cover coins, but here's your Bitcoin, by the way, to the penny. Right. Bought it at
5. Hey, Gary, what do you think of this trade? I bought it at 5 and got out at 8.
I've done that plenty of times. Don't sweat it.
If
I go back on all my trades and never sold, I'd be Buffett right now. So
I'm always out to. I make the tough money. I get out, and then the windfalls happen.
Yeah.
Anyway,
and by the way, I know I sit here and talk about what I worry about. But right now you are in a, notwithstanding, we can get a rug pull for a couple of weeks at any time right now.
I'm looking for that from this week. I'm looking for, maybe 3,500 in the S&P.
Yeah, I think you can get one. I just, if you're not bullish here based on what I'm seeing, you're missing. So I'm buying anything that breaks out with stops as usual. The commodities look, like they're maybe early stage.
Yeah, especially the grains.
I mean,
you can't eat gold,
I was looking. By the way, gold is. I'm thinking that maybe Bitcoin is replacing gold this second. I think gold will have its day again. But I have a sneaking. I would have thought gold would have been up another $2,000-3,000 right now based on the dollar. So I mean that may be the coins. I don't know. But everything else looks in gear, right? Just about everything else, except IBM also.
Well, it was really great to meet you. And you know what happens when you survive an interview with me, and I know you're a pro. You go both ways on a microphone. You're by microphone sexual. You could go either way. You become my trading warrior, brother, because we
My
go through the same battles every day.
my
So
goodness gracious.
yeah,
By
I
the way,
really
just one last note.
go
The
ahead.
best thing everybody can do right now is make a list of stuff that ain't working. Those will be your best short opportunities when this ends. Like IBM is like one of the tops for me here. I think that thing goes under 100. If of course, if nothing changes. Again, when things are so strong, isolate the weakness, and I'm going to be ready for the short side when I think it's time. So just a little word of note there.
Great interview, Gary. I'd like to ask you to come back maybe in the spring. We'll see, maybe May, and see what's happening with this euphoria, see if anything has come around to pop it. So I appreciate you giving us your time, because, that's your most valuable currency is, money comes and goes, time is gone forever. Thanks for spending some of your time with us today.
Please ask again. Thanks for doing this.
All right, everyone, Gary Kaltbaum, and that's a wrap for Turnaround Tuesday. Remember, don't just count your pips, count your blessings, and we'll see you all tomorrow. You're very welcome. Thanks again, Gary.
Got it. Take care. Have a great day.
Adios.